everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, April 3rd, 2013. Well, a continuation of the trend to the downside today, and the candle that we're analysing is this second last candle on the chart. That final candle there that we're looking at is still currently developing in a major way, so we'll come back and have a look at that. But we need to analyse the candle that has actually finalised trading, and that's this fairly large black body candle. So another second day of very solid downside momentum by the sellers. They've made a substantial amount of net bearish progress in terms of the net change between the open and the close, very similar amount to the previous day's trading. So they've pretty much maintained that solid downside momentum that we saw for the previous day's trading. The sellers have closed down below the midpoint level and the low, suggesting that they have closed with control of this market, not strong control and not as strong as the previous day, but certainly strong enough to suggest that there is potential for this market to trade lower. We did see some upside price rejection as the market tested within this highlighted zone of support, previous support and resistance level. Previously we've seen the market test there in the recent past and be rejected from there in a very strong manner. Here today we've seen the market close within that level, and that could be significant. It does suggest that this market is destined for lower levels, and today if we look at this trading as it's happening, the market has already established a lower high and a lower low, suggesting continuation of the trend to the downside and a very large black body candle. We don't know how that candle is going to end up, so we do need to watch that candle at the close of trading, but at the moment it does suggest that this market has potential to test down towards this 1523 level. Perhaps not today, but it could do over the next few days, so we do need to watch that. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend that the market's in. It's been in a downtrend for quite some time, and looking at the relationship of that to the previous time the market's trending down. And here, for today's trading that has finalised, we saw upside price rejection from the 261.8% level, an important level, but the short-term dynamics aren't favouring that strongly. The sellers still have control of the market, but we did see the sellers lose commitment down below that level. That does suggest there is potential for the market to bounce off there and change trend, so let's watch this candle as it's developing. Not developing too well in terms of that, sellers in control, so this is suggesting that there is potential for the market to trade down to the 423.6% level, down around 1516. In terms of the Fibonacci retracement, today we saw the market trade exactly to the 161.8% level and be rejected from there. So that could be significant. Let's watch for a bounce. Just because this current candle is developing to the downside in a bearish manner doesn't mean the buyers might not come back in and change the dynamics for the trading day. So we do need to watch that. Now, as I've already mentioned, the short-term dynamics aren't favouring the buyers at the moment. The sellers are still in control, but this small amount of rejection from this 161.8% may be significant. Let's watch this current candle as it develops. If we do see the buyers come back in and close with control of this market, it could signal that there is potential for a change of trend to the upside. Now, in terms of Ichimoku, obviously a bearish market in all three time frames. The market is trading down below the clouds, so a bearish bias in the long-term time frame, and the market is trading down below the Kijun-sen and the Tenkan-sen, so bearish in the medium and fast-term time frames. And the short-term dynamics are favouring further downside with the sellers closing with control, and that's exactly what we're seeing at the moment. Let's bear in mind, however, that we are now trading in a very, very solid zone of support. That zone does extend a long way down to 1523. We don't know where the buyers could come in. They haven't come in here at the top of this zone as they have in the recent past, so certainly sentiment in this market has changed a fair bit over the last few days. But let's look for upside price rejection from within this zone for buyers to come back in, and it could occur anywhere down between this 1559 down to 1523 level. Now, also we do need to bear in mind that now that the market has closed down below this level, the top of this zone at 1559 could offer itself as resistance. Here in the recent past it has acted as support, and for today's trading, as we've seen, as this current candle is developing, the market has traded exactly to that level and has been strongly rejected from this. So there is good evidence at the moment that that is acting as resistance to this market. So it does seem that this downtrend will continue. This market is developing very strongly to the downside. We do have some Fibonacci targets and potential for this market to test down to the 1523 level and even down to that Fibonacci ratio, roughly about 15, 16, 15, 15.